Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome into the Friday, December 31, 2021 Market Plus New Year's Eve edition. New Year. Don Rose, Merry Christmas, Happy New Year. This week was anything but calm. There was no on-site vacation for you this week.
No, Santa Claus came early and late, and then he left for New Year's here so far in the grain market. So, that was a big roller coaster.
Okay, so what was the biggest story this week?
I think the biggest story is that we had an awful lot of hype already dialed into the market, that we weren't going to see a weather pattern change, that the market was just going to keep moving up to new levels. And I think got really spooked when you saw a little bit of a change in the weather, and really not big buyers as the market started to break. The end user kind of kept his hands in his pocket. He probably is pretty well covered for a little bit of a distance here. So I think the biggest story was weather in South America, not end of the year buying by the funds.
All right. Well, you know what? I said we're going to go in order. We're going to go reverse order on questions. And I can hear them laughing in the control room. And they knew what I was going to do. We're going to start with Tim in Crookston, and it's about South American weather. I asked this a little bit in the show. What's the real story on South American weather? You just kind of touched on it. We asked it in the show. Is it as big of a deal as it's been made up to be in the last 3 weeks?
Well, remember last year, Brazil, the corn crop down South America, we lost 1.4 billion bushels of corn. Right now, we're talking about on the top side, you hear people that they think they know, although nobody really knows the yield eventually. We found that out last year, and what's the genetics do? Somewhere around 200 million bushels lost maybe in the corn, maybe 200 million bushels in the soybeans, but late rains can give us more of a boost than we think. So I think we've lost some. How much? What did the genetics do, Paul?
Well, exactly, and that was a discussion I had at Christmas with some people, was this whole, the crop, and it's like, remember, we spoon-fed some moisture and had almost the second highest crop. So dry conditions in Brazil don't scare us like they used to in, say, the 90s, the 80s, or for sure earlier than that.
Well, it's the northern 2/3 of Brazil. Remember, it's the Amazon, so you've got basically, don't worry about the moisture much there, and that's where we got hit last year. It was really a surprise. So about 25% of Brazil's corn crop is in the first crop, the southern crop, if you will, mostly. So to get the yield losses we had last year, I doubt. Do we have most of the yield loss dialed into the market? Probably. Does it get much worse? We're through pollination. We're filling corn right now. We're starting to fill pods on soybeans. I think you got most of it dialed in. If we get a positive weather forecast as far as inflammatory and we don't go up, that's a warning sign for the bulls.
Okay, well, bulls, I know it's different, but Joe in Minnesota, he has a cattle question. He's more about feeders here. How much higher will the November 22 feeder market go? And I think he would mean 23 22. What's your outlook?
Well, I think like a lot of these commodity markets, you've got an awful lot of bullish news dialed into the market. And from a risk manager standpoint, certainly makes sense to protect yourself when you have feeders up at this level, when you have fat cattle in the fourth quarter at 145. I mean, where do you think it's going to go, I think is the question. We got a lot of powder in this market because the grain market's up here at some historical high levels. All these things change, the market changes. Remember, the biggest thing you have in agriculture is it's very cyclical. We go from not enough to too much, and we do it over and over again, so that's what you have to guard against.
If we eat too much, we have to pay the price with a little indigestion. I know there's some Thanksgiving to Christmas things to talk about, but this one kind of ties in a little bit. Matthew in Strawberry Point asked us on Facebook. He asked, should we be selling corn or soybeans right now because grain prices are high? How long do you expect prices to stay where they are?
Well, one, from a structure standpoint, when you've got March corn inverted over July by, let's just say, a penny, basis levels is strong, there's not an incentive to hold on to cash corn. So that means if you aren't, if you still do, your neighbor probably isn't, probably the commercial beats you to the punch. So at the very least, you should change your ownership to a different direction. And you have to ask yourself, if you think you're a good marketer, usually you say, man, you're really good. If you're at the upper 10%, do you think the corn market can move up another 60 cents or not, from these levels? you're sitting here at almost new highs, almost contract highs for Dees corn, not that far off of November soybeans. So it looks like we're seeing people take advantage of it with maybe some different type of strategies to give yourself some flexibility, but we are seeing people take advantage of it, moving cash, reowner with options and some things like that.
There is a group of traders who say, if we're getting near the highs now when we're not supposed to, this thing can only go up. Is that why you're seeing those protections that you just talked about? Or are they playing with some money that you want some of that?
Well, I think it's a contra-cyclical. Could we be putting our tops in when we're usually starting to accelerate? About 2% of the time you put your tops in corn, Ocnove Dees. And you put your tops in usually about 20% of the time in May, June, July. So we're putting an awful lot of the top in here right at the present time. But these input costs, Paul, are so high that if you're a producer, you owe it to yourself to do some kind of a risk management, protect that. Nothing worse than buying high inputs and then selling the price, not the price that doesn't cover your break even. And it can happen so quick. There's a lot of moving targets out here that can change.
This week to be included. Like I was going to joke with you, I got all these questions. They were moot by today on Thursday. That's the way things move. All right, Tom in Kansas. This is an acreage question. Are beans and cotton in an acreage battle?
Well, I don't think it's just beans and cotton. I think everything's in a battle for the acres out here. There's only so many acres, 264 million total acres that you can actually put in production. So cotton is fighting with soybeans. Soybeans are fighting with corn. Wheat's in the mix someplace. And then you've got some of these small feed grains that are also in there. So yeah, most definitely. But we don't just see that here, we see it around the world. And when you look at South America, we're talking about an acre mix is going to switch, a lot this way or that way. South America, they just went through this and didn't really see that big of an acre switch. Added some total acres, as they always do every year.
All right, let's see. Rock Valley Feeders in North Dakota. I know we kind of asked your question, but we'll just do it again here real quick. Via Twitter, technicals and fundamentals of cattle say an upward trend going into 22 is potentially limitless. You've discussed this a little bit. What is going to stop it aside from another black swan? You can't predict the black swan, but is there something else? You've said it a lot in other answers. Is it hold true for cattle?
Well, I think a lot of things can change. What you have to be concerned about, of course, it's the black swan, the COVID, but then you have to also ask yourself, is the inflationary buying of everything going to stick, or are interest rates going to eventually go up, slow this thing down? Do the grain prices come down, and that changes the overall break evens? Do you think that we're going to stay at these historical highs? The ultimate person that decides, that's the supply side we're worried about, but the consumer still has to buy it. And that's the one you probably have to be careful of. We always say if you don't sell it, you smell it. So that's at the retail level.
Don Rose bingo sheet. Check off another one. All right, last question here is from LJ in Minnesota. What are your thoughts, Don, on going into 22 and China's grain buying of U.S. commodities? Will they be big players again or go back to their normal ways of just casual soybean buyers? You already talked about phase 1 and phase 2. What do you think of that question?
Well, one of the reasons, phase 1, and we pushed China to buy supplies, grain last year, but they needed the grain. Remember, they had huge flooding last year. They lost 10% of their corn crop, 400 and some million bushels of corn. They lost soybeans, they lost barley, so they needed the supply. This year, they don't have that same problem. That is one of the reasons we rallied last year.
Anything else? Well, I got nothing else.
Well, I think in the big picture, Paul, I think you have to think in terms of what's 22 look like, and it looks optimistic today, but things can change.
Always good to have a good bow on the end of the year, and Happy New Year to you, Don.
Happy New Year to you and all your listeners, Paul.
All right. Don Rose, thank you so much. Next week, we will look at the decline in CRP acres, and Jeff French will sit in that chair and analyze the markets. Thank you so much for watching. Have a great week.